All right. Good morning, guys. Market had a crazy day yesterday. Market actually opens in 1 minute. I went on a bit later today because I won't be taking any trades except maybe GLD. Maybe it's a big maybe, just because the fact that the market's been pretty ugly today or yesterday. I mean, this past week as well. And then I think it's safer. It's a lot safer if we actually sit on our ends. It's Friday as well, so I mean we don't have to force anything. So yeah, if we sit on our hands for maybe a couple of days, or at least a day, and see next week what happens, if something's is there some sort of news this weekend, whatever. Today we don't have to rush anything, but at the same time, um, it's kind of it's kind of weird because when the market is down, usually gold is up, or when the market is choppier, gold is usually up, or it tends to go up. Market is open, by the way. And yeah, so I'm only looking at gold. Probably will be a very short session. So if gold just doesn't go at all, I'll put an alert, for example, at the high of yesterday, which is at 377.69. So I'll put an alert here just in case it wants to go. I've got stopped out as well of GSAT at my break even yesterday. My break even was around here, I guess. So I don't have any position right now. I'm fully cash, 100% cash. I took this as well. Huge reversal. I skipped this one, had even bigger reversal. And this I was in since this breakout day as well. Got stopped out of break even. So I'm fully cash right now. Only looking at gold for today. And yeah, like I said, the market is, I don't doubt that the market can try to recover today. Not fully recover, but I mean, like this day, for example, it dropped 2.7% in a day, and then the next day it did 1.5%. Yesterday it dropped 1.5%, which was, I mean, better, I guess, it's since it got so high, but since opening, it dropped 3% yesterday, which is kind of insane. In my opinion, there's a high chance that it wants to recover a bit. Like, for example, it did. Just for example, let's say 0.5% or even 1%. But now, I mean, it just looks like it might want to go down, continue further, which, I mean, it's not a good thing for the market. But whatever it does, I'm not really interested in whatever is happening today, just because, I mean, when there's days like this, you need to calm down. You need to take a step out, take a step back of the market and just see what will happen. You don't have to rush anything. And I know I've been saying that you don't have to rush anything, but it's pretty hard in the market, right? Because I think we all love to trade. Um, but sometimes you have to not trade. And it's not trading and being patient is a strategy. And it's as worthy of a strategy than just taking trades when it's a good market. When the market is bad, either you play to the downside, which we do from time to time. It's not our main go to, I guess. But you can also just sit out. And especially when the market, when the 10 SMA is under 20 SMA, it's like statistically, it's not bad to sit out. When the 10 SMA is above the 20 SMA, statistically, it is bad to sit out. But when the market is like right now, even the 10 SMA just crossed slightly below its 50 SMA, which is even worse. It's not a bad thing to sit out. I'm fully cash right now, and yeah, I guess technically and statistically, it's not a bad thing to just be fully cash and wait a bit. However long it takes, right? However long it wants to maybe pull back for. I think we kind of needed a pullback in the market. This, I guess, this was a 1 day pullback, but it kind of just went back right away. And since highs, I guess, it pulled back 5.5% in like 3 weeks, which is, I mean, it's fine. It's better than what we had here for the market because we need pullback to to perform. if we want to have another run, we need some pullbacks. We can't just go on forever. At some point, it's going to pull back. Things are going to, you know, build new ranges, maybe a bit lower, especially for momentum stocks. Um, there will be a sector rotation. Things are going to turn around, and maybe we'll have some new leaders in the market. And then when we do identify these leaders, that's when we can focus on them and start trading. Again, when the market is good. How long can this take? I don't know. It can take 2 weeks. It can take 2 months. In 2022, it took like 8 months. But yeah, at some point, you can play down the downside as well. Is it smart? I mean, here, I guess it wasn't really smart to play the downside. Here, when the SMAs are, you know, underperforming, I guess, or decreasing, it's not a bad thing to try and play the downside. The only thing is that we usually do shares or option when it's a good market. But if you play the downside, it's either, well, you have two choices basically. It's either you do shares and you short, so you borrow shares and then at a certain price, and then it goes lower and you buy them back. So that's why, or that's how you make your profit. I don't recommend doing that because first of all, you need to have a margin account, which is usually, well, if you have a margin account, you have the PTT rule, which applies to accounts under $25,000. And if you have a, let's say, 25 or so $1,000 account, if you lose a couple of trades, you're under $25,000. So I don't recommend doing it under $30,000 just to have sort of a margin, sort of a buffer to play with. And as well, shorting, you can be you can be in debt by shorting. That means that when you short, the maximum you play the downside. So the maximum you can make on a trade is 100% because technically or statistically, the maximum a trade can go down is 100%. If it goes to its current price, I mean, from its current price to zero, well, it is a 100% move to the downside. It just loses its entire value, which is 100%, right? So by shorting, that's the maximum you can make, 100%. Rather than when you play shares to the upside, there's no maximum. We've seen some stocks that made thousands of percent in just a couple of days, months, weeks, or whatever. So there's no maximum. We've had some plays that had a couple 100% in like a couple of days, couple of weeks. So that's just buying shares. When you do options, it's a different thing. The difference between shares and options is the position sizing. What I personally do when I trade shares, I calculate my risk. For example, I pull out this calculator. Can you guys see? Oh no, you can't. One sec, I'll do it on this screen, I guess then. Right, so this is calculator. You guys can see right now. I know that a lot of people in the Discord are actually, well, you guys are used to it. But let's say you have a $10,000 account. This is the default value. Risk is this. Usually, I risk between, let's say, 1/4% to 1%, depending on the market conditions. For right now, I do either 1/4% or even 1/10%. But let's take to 1/4%. Let's say we take whatever this today. Growl stop is at the low of the day, so 86, right here, 8609. 8609. And our entry, let's say it's right here at its current price, so 87.99, my bad. Maximum amount of shares you can buy at its current price using this stop loss price for a $10,000 account risking 1/4% of your account is 13 shares. 13 shares at, I don't know, $88. You have, let's say, around $1,150 dollar position, or that is your position size. Position size is the amount of money you have in the position, which in that case, it will be around 11.5% of your account, right? For this. So this is shares. You can have much bigger size of your account into a trade. So that one is 11%. Sometimes it can go up to like 20, 25%. I don't recommend going more than 25% just because if there's a gap down risk, right? But options, so as you can see, we have options price here, right? Options price, let's say Graal options chart or whatever, Graal option chain. So let's look at Graal option chain. Um, there's not a lot, but let's say last year for $80 strike. Well, near the money, no. I want all of them. All right, that's better. So let's say we target $95, whatever it is. It's not calculated, by the way. It's a random thing. Calls. Where calls? All right, calls, $95 here. So these will be for November 21st, which is today. Wow, it's pretty expensive for what it is. Honestly, it gotta move fast, right? Yeah, almost 10% ADR. Let's say $95 calls. It's $78, right? So let's you do here options price 0.78. You can buy zero for because 0.78 is $78. It's times 100. You can buy zero using this risk. You can buy one using this because it's $78. Your 1% risk is $100. So your position size is only $78. But if it goes to $95, for example, that's an 10%. That's a 10% move basically in the stock today. So if you enter here, it goes to 95, you make 10% of your position if you buy shares. If you buy options, you can probably make a couple hundred, if not 1,000% of your option because it expires today. It moves a lot faster. You have a lot slower position, a lot smaller size, I meant. So that's kind of the difference. So yeah, back to what I was saying with the shorting and the downside, you can do puts, which is what I usually do. I used to short. I don't short anymore, or I very, very rarely do. I don't think I shorted this year actually, but when I do, it's with puts. Puts is the downside play of calls of options. So in options, there's calls and puts. Is when you play the upside, and puts is when you play the downside. Puts, I usually do that when I short position. For example, this one, or which one is the last one that we shorted? I think it's open here. It's been a while. I don't exactly remember. But we shorted this, right? It had, let's say, it peaked at 500, I guess 50% or so move on a couple of days. Closed at 300 or so percent in 7 days in a week, actually. Gapped up 21% overnight. So I was like, all right, well, I'll try. It's not a perfect setup at all. It is sort of a parabolic short. Usually, it's better when it's gapping even higher, like above these wicks. So I was like, all right, I'll risk less, but I'll still try it. Enter here was on a Wednesday, so it's not 1 day expiration. It was 2 day, or I guess 2 days expiration, 3 days until expired, including Wednesday. And from open, I guess I entered here or so, made around a minus 25% move during the day. I think these contracts went and run like 100 or 200%, whatever, something like this. But exactly. So for a 25% move to the downside, my contracts ran, let's say 200% or so. I think it was even higher, 240%. So yeah, this is what you can do when stock market is looking like this. For example, this Costco, if you look at this, I guess this kind of was a range, right? Or even with here, I guess. This is even better. This is a range, this is a breakout to the downside. It's much harder to see the downside if you just flip your screen around and you play it like an upside play. It will be a lot easier to spot. For example, this was a clear breakout. If you bought, for example, puts here, just when it broke down, First day did 123%, which is almost ADR since entry. And then the next day, if you sell, for example, during the day, it is a very big move. I think contracts ran like 500 or so percent. I've another trader that I talk with sometime. He traded this, and I think he made like between 4 to 600% by playing this. So it's not usually the type of trades I take, but he does. And actually, it was a good breakdown. It was a pretty clear breakdown. So this is what you can do. For example, AMD. AMD had a clear breakdown here. Now I skipped this because it broke down the day before Nvidia earnings, but or 2 days before Nvidia earnings. I think was I mean it was Wednesday night, but yeah, this was a clear breakdown. So first day had a minus 4.25%. Let's say you enter here during the drawdown, and then let's say you buy contracts for today, like for the expiration at the end of the week, and then you hold them. Now it's down 13.75%. So if you short, you make around 14%. But if you play puts, that's probably a couple 100% for sure. Without a doubt, that's a couple 100%, if not close to 1,000. So yeah, exactly. Sometimes in this market we can play these, but it's not something that I do that often. I rather sit out for a couple of days. If the market is going to the downside for a bit, maybe I can try to do some breakdown plays. If not, I'll just wait a bit and then see how things are headed. If it's choppy, I rather not play to try and do some breakdown plays or play the downside. If it's not choppy, if it's a clear, let's say, bear run like it was in 2022, which I'll show you guys. Now this is choppy, right? Because we don't really know how things are going to look, right? There's some sort of support here. I guess this broke yesterday, but in 2022. So look, on the weekly, it just bounced off its 20 SMA. But in 2022, this was 2022. Yeah. Look at this. This is a weekly chart, so clear downside. And then if you go on daily chart, I guess it's here. Market was under all SMAs pretty much all the time, or not all the time, but it was under its bigger SMAs. So it is a bear market. Bear market is determined by, when things are just going down, under this certain percentage for, I think it's a recession, it's 20% or so, or a financial crisis, it's 20%. But this probably wasn't 20%. Oh yeah, I guess this was 20% or so. So I guess this was a recession. I think recession is 20%. I'm not sure. But this was a bear market. When things are like this, you can play the downside. And I even did some day trades. For example, when you play the downside, this is the market, so it doesn't really count. But when things are like this, for example, market is just breaking down this much. So this is SPY, by the way. It's not an individual stock. But here, I guess it had some sort of range. Huge breakdown here. Next day, continues lower. So I did a day trade, like in days like this or days like this. Or I'll buy here based on intraday supports. Based on intraday supports, maybe I'll hold a bit, and then eventually, like this is how I was able to make some sort of money. I think I made 140% or so in this market in 2022. While every single hedge fund, pretty much ever, was negative. So obviously, I was playing puts. I was not playing exactly how I'm playing right now, just because it was a different market, so it's normal to not play exactly like you do right now. If market is just going in bear market as well, which it's too early to say, but if we are, probably will have maybe not day trades, but more plays to the downside, which again, it's not a bad thing. It is just a different sort of play. It's the exact same strategy. but to the downside. So we have to be just as selective. And in a choppy market like this, we have to wait until the market clearly chooses a direction, right? It is choppy. Again, if it bounces in the next couple of weeks, it just goes back higher, well, we'll get trapped if we play the downside. And if we play the upside and it just goes back lower and touch, for example, it's 200 SMA, well, we'll get trapped if we play the upside. So right now we're kind of in between in the transition phase. So we need to wait, and that's exactly why we need to wait. We don't need to rush anything. I hope that makes sense. I tried to explain quickly how I was seeing things for the market right now. By the way, gold isn't moving much, so probably will not take anything today. I did not upload my updated watch list yesterday just because I knew that I wasn't going to take anything today. And usually I do my watch list, at least I do them like a deeper dive in the weekend. So usually it's Saturday morning, and then I update them on Tuesdays and Thursdays. Yesterday we were Thursday. I did not update it. I did not. I mean, I went and looked at my watch list, but I did not do a deeper dive in that, just because I knew that I was gonna not do much for today, Friday, and then I was just going to upload or to do a deeper dive and just to update, I guess, my watch list on Saturday, so tomorrow. So this is why I did not send it yesterday. I did not forget. Don't worry. So I guess it was kind of all I wanted to talk about today. If you guys have any questions, especially in these market conditions, it's kind of the worst market condition. No, it's not the worst conditions at all, I think. Yeah. We had we've had this together. Well, for some of y'all, we've had this together, which was kind of bad. Honestly, our account, I mean my account didn't move much for like 3 months. How long was this? From Feb to maybe not Feb, for like March to May, I guess. So March, April, May. Yeah, like 3 months or so. My account pretty much didn't move. So I was going on like 5% profit run, 10% profit run, and then I was going on 5 to 10% drawdowns. So for like 3 months, I was trading a bit, much lower risk, and my account just wasn't moving. So I mean, I was up from time to time, and then I was down from time to time. So that was just 3 months of pure market experience. This is a good thing. The good way to see it is not that you lose time, it's not that you lose money, it's that you gain some experience in the market in harder conditions. And if you don't, again, I can repeat this over and over. If you don't trade within these conditions, well, right now it's fine. But if you don't trade, for example, in a bear market, if you don't try to trade or to adapt in a bear market, you can do 0.1% risk. I don't care, right? Whatever you're comfortable with, because you'll get stopped out a lot more. But, and I'm not saying you need to trade every day. If something is worth taking, take it. Play very low, very, very, very low risk if you need to. But take it, you'll see how the market is reacting. You need that experience. It is hard to accept that you will lose money and that you will willingly lose money because you take these trades and usually I guess your win rate is much lower. Um, like in these conditions, win rate is like 20% or so, 25%, I guess. In a good market, it's usually between 40 to 50%. So on the average, it's around 35% for this swing trading strategy with a 3.5 risk reward ratio, which makes us profitable over time. But if you don't trade in a bad market, well, eventually you need that to be a trader. That is what I'm saying. But yeah, I guess this will be it for today. Market isn't moving much for now. Gold isn't moving much as well. Volume is not bad. But yeah, I guess it will be it. Um, I'll be active in the Discord pretty much the entire day. And yeah, I kind of have a busy day today. Well, obviously, trading is a part of it, but I have some things this afternoon. I have some meetings, some calls for general businesses, other businesses that I have. Kind of in, kind of is an interesting day. But yeah, I'll keep you guys updated. I'll be active in the Discord as always. If you guys have any question or just insight, if you want to talk, whatever it is, I'll be there. So I hope you guys have a great day, and I'll see you around.